Hello and welcome to our market alert video for today, which is December 23rd, 2022. And I hope everybody is staying nice and warm. I know it's very cold across the country. It's certainly cold here. And I was planning on actually having my grandson being my guest host with me. However, they're preparing him to go see Santa later on today, and so we'll have to wait for a different day to have him. But he's really good. He's 14 months old, but he's very eloquent. He understands the market and has an amazing grasp of what's going on with economics. Anyway, I want to talk with you about what happened this week. Why did the market go down so much? We got basically what you might think would be good news. GDP, the gross domestic product, which is the total of all the goods and services in our country, was actually higher than expected. So that would be a good thing, right? We're producing more stuff. Well, no. And the reason why is because what this is going to do most likely is cause the Federal Reserve to have to raise interest rates even more than what we were thinking. And the reason why is because you would think by now that the economy would be slowing down with everything the Fed has already done. And so apparently it's not, and they need to do more. And that therefore is going to drive the profits that company makes. So what we believe is that it's not the macro environment. It's not whether we're in a recession. It's not whether we have unemployment. It's not whether we have inflation. All those things are important, but that is not what drives the stock market. What drives the stock market is profits. So let me give you an example. Let's say we have a company that is doing very, very well. Their profits are rising and they're doing very well, but yet we're in an environment where we have high inflation, high unemployment, we have all kinds of terrible news. Well, what does that mean? Their stock price will probably go up in that environment. Conversely, you could have a very good economy where there's low unemployment, no inflation, and everybody's doing very well, but this one company's profits are going down. What's going to happen to their stock price? Most likely it will go down. So the market looks at profits. So what's happening right now in our view is that there's a consciousness now that maybe profits next year are not going to be good. In fact, they may be lousy. Bank of America, Goldman Sachs came out and said they think that the profit outlook for next year is going to be very bad. So what that means is that as the Fed now has to raise interest rates more than expected, they're going to cause the cost of money to go up. If the cost of money goes up, then profits go down. Also, if they raise interest rates too high, the recession will be very bad, and that will cause a lot of people to be unemployed. If they're unemployed, they don't buy stuff, profits go down as well, stock prices go down. So that's kind of the vicious circle, if you will, that's happening. The consciousness we believe now in the market is that profits are not going to hold, and if they start to fall, then that's not priced in right now, and the market needs to go down a lot more than it has to reflect that, if that in fact is the case. Now, we think that is the case. We think it's not priced in and profits are going to go down, and the market has not gone down as much as it's going to given that environment. So right now, we're still counseling our clients to stay out of bonds, stay out of stocks, and to be in cash. And what I mean is the money market fund. And we've been so since April. Our invest and protect strategy said to get out in April of this year. We got out of our bonds then too. And that's been a very good decision so far. And we think it's going to be a good decision going forward as well. If you're over 50, if you are within 5 years of retiring or you're already retired, we believe the downside risk to you right now is way greater than the upside potential. And whenever that dynamic is in play, we don't like to play. So we prefer to sit it out. And the good news is that the Federal Reserve, as they raise interest rates, the interest rate you get in a money market fund goes up right with it. So we're being paid to stay out of the storm, nice and safe relative to the markets. We believe that's where we should be. Now, your situation is potentially different. Visit with one of our retirement planners, get a second opinion. We don't think it's too late to get out right now. We don't think it's too late to protect what you have. And we'd love to visit with you, build a retirement plan with you, take into account our invest and protect strategy, all of that, and do it at no charge or obligation. And if we can help you, fantastic. And if we can't, that's fine too. We'll part friends either way. So go to our website, rpoa.com, and click on Meet with an Advisor, and we'd be happy to do that with you. So share this video with as many of your friends, associates as you possibly can. We want to help as many people as we can make their way through this storm that we think is not over and is about to get worse. So thanks for watching this video, and we'll talk soon.